All right, welcome everyone. You know, in the world of finance, our world, it's all about speed and volatility, right? And every so often, a story, a rumor, starts to bubble up that just makes everyone stop and listen. Today, we're going to tackle one of those big ones. It's a story all about Ether, the world's second biggest digital asset, the one that's always kind of been in Bitcoin's shadow, but is now starting to cast a very, very long shadow of its own.
You've probably heard it, right? It's that whisper going around the trading desks, popping up in investor chats. The idea that Ether is about to enter a super cycle, just like Bitcoin. I mean, that is a huge statement. It's not just talking about another bull run. It's suggesting a fundamental structural shift in value that could last for years. It's a story that promises a whole new chapter for the future of decentralized tech.
So that's the big question we've got to ask ourselves today. Is this the real deal, or is it just, market hype? I know a lot of you watching are seasoned pros, some of you are long-term holders, others are all about momentum. But no matter how you play the game, we're all wondering the same thing. Is there a real fundamental case for an Ether supercycle? So let's dig in and find out together.
Okay, here's how we're going to break this all down. First, we'll look at the past, because history really does matter here. Then we'll get into the actual thesis for this supercycle, the bull case. After that, we've got to face the risks. We can't ignore those. And finally, we'll pull it all together for the final verdict.
All right, part one. The past writes the future. You really can't figure out where something's going unless you know where it's been. And with Ethereum, its history is absolutely key to understanding its potential.
So, the story of Ethereum is, well, it's a wild ride. It all kicks off back in 2011. A super young Vitalik Buterin has this incredible idea. He looks at Bitcoin and thinks, okay, digital money is cool, but what if a blockchain could be more, like a world computer? And from that, Ethereum is born. Fast forward to 2017, and it just explodes. Shoots up over $1,400, but if you've been in crypto for 5 minutes, you know what comes next. A massive, brutal crash all the way down below $100. A lot of people got wiped out. But then, the revival. 2020 brought the DeFi summer, and suddenly Ethereum was the undeniable heart of decentralized finance. That wave took it to a new all-time high in 2021, over $4,800, with NFTs just fueling the fire. And that brings us to today, 2024, where it's all about scaling with layer 2s, and crucially, big institutions are finally, seriously getting interested.
And when you look at that timeline, you see a pattern, don't you? This insane cycle of a massive boom, then gut-wrenching panic, then a total collapse, and then a revival. This isn't just an Ethereum thing. This is the playbook for almost every single groundbreaking, disruptive technology that's ever come along in history.
I mean, just think about Amazon back in 2000. During the dot-com bust, the stock got absolutely annihilated. It went from $113 down to just over $5. Can you even imagine that? A 95% drop? If you bought at the top, you were convinced it was over. But here we are 2 decades later, and it's a trillion-dollar monster. The point is, for these truly revolutionary assets, a crash isn't always the end. A lot of the time, it's just an intermission. And Ether's already been through this movie a couple of times.
Okay, so before we go any further, what exactly is a supercycle? Let's make sure we're on the same page. This isn't just a good year or a strong bull run. We're talking about a long-term thing, maybe lasting for years, where the fundamental demand for an asset just massively and consistently outstrips the available supply. It's a structural shift. Now, you hear this term with Bitcoin all the time, right? The halving, the fixed supply, that's its story. But the case for an Ether supercycle, well, that's built on something totally different. Okay, let's get into the good stuff. Part 2, the thesis for a supercycle. What are the actual arguments that could drive this? Let's explore the bright side of Ether.
The absolute engine behind this whole supercycle thesis, it really comes down to this one core idea. Ethereum has become a relentless 24/7 supply burn machine. And this isn't just some small tweak. It's one of the biggest economic changes we have ever seen in any major digital asset.
It's an upgrade called EIP 1559. And what it did was totally rewrite the rules for Ether's money supply. Now, every single time you make a transaction on Ethereum, a little piece of that fee is just gone. It's burned. Poof, it's permanently removed from the supply. And here's the kicker. When the network gets really busy, like during an NFT craze or a DeFi boom, more Ether actually gets burned than is created. The supply literally starts shrinking. It becomes deflationary. Just think about that for a second. For the first time ever, a major global asset supply is directly tied to how much people are actually using it.
And this is probably the best way to think about it. If Bitcoin is digital gold, then Ether is like the crude oil of this new decentralized economy. Bitcoin's value comes from its absolute scarcity. Ether's value comes from its utility. Every single decentralized app, every layer 2 solution, every smart contract, they all need Ether to run. They're like the factories and engines of Web3, and Ether is the oil powering them all. So the bigger this new economy gets, the more oil it burns, and the more scarce and valuable that remaining oil becomes.
But the burn mechanism is only one side of the coin. The other massive piece of the puzzle is staking. When Ethereum moved to proof of stake, it changed the game completely. Now you can take your ETH, lock it up to help secure the network, and in return for that service, you earn a yield. This does two incredibly important things. One, it takes a ton of ETH out of the liquid market, which tightens the supply even more. And two, and this is huge, it turns Ether from just something you speculate on into a productive asset, an asset that actually generates cash flow.
And this right here, this is why the new Ether ETFs are such a massive deal and why they're fundamentally different from the Bitcoin ETFs. When an institution buys a Bitcoin ETF, they're buying a non-productive asset. It's digital gold. You hold it, you hope it goes up. Simple. But an Ether ETF, that's exposure to a productive asset. It's something that not only stores value, but can also be staked to generate a real yield. For a portfolio manager at a pension fund or an insurance company, that is a completely different conversation. It's not just some weird commodity anymore. It's the internet's bond. It fits into their traditional models in a way that very few other digital assets can.
And look, at the end of the day, financial markets run on stories. They just do. A supercycle is never just about the numbers on a spreadsheet. It's about a powerful story that people believe in. Bitcoin's story is incredibly simple and powerful. It's digital gold. But Ethereum's story is arguably even bigger, even more ambitious. It's the foundational layer for the future of the internet. It's a story about a decentralized world without gatekeepers. And in the battle for capital, a compelling story is your greatest weapon.
Okay, but we have to be realistic. A credible analysis isn't just about the upside. We have to look at the dark side too. So part 3, the risks we must face. What could stop this whole supercycle thesis dead in its tracks? It really boils down to 3 big challenges we have to consider. First, you've got fierce, and I mean fierce, competition. Second is the persistent problem of high transaction fees, or gas fees. And third is the ever-present shadow of regulation. So first up, competition. Let's be honest, Ethereum is not the only game in town anymore. Not by a long shot. A supercycle implies dominance, but that dominance is being challenged every single day. You've got Solana, which is crazy fast and cheap. You've got new, well-funded chains like Sui and Aptos popping up all the time. Heck, even Ethereum's own Layer 2s, which are meant to help it, can sometimes fragment the user base. Its crown is definitely not guaranteed.
The second big risk, gas fees. Yeah, Layer 2s have helped a lot, but the main Ethereum network, the base layer, can still get incredibly expensive when things get busy. And if you're seriously talking about global mass adoption, you can't have a network that prices out the average person. Right now, it can sometimes feel like a playground for the rich, and that remains a significant barrier to true growth.
And the third major risk, all the legal and regulatory stuff. For the longest time, there's this big question hanging over Ether's head. Is it a security? The SEC was looking at it very, very closely. Now, the recent ETF approvals have cleared up a lot of that, which is fantastic news. But that risk hasn't completely vanished. A sudden change in policy or a new aggressive regulatory stance could still scare away the big institutional money that this whole thesis depends on.
All right, we've seen the bull case. We've faced the bear case. Now it's time for part 4, the final verdict. Let's put all these pieces together and see where we land.
You know, I think the best way to frame this conclusion is to think back to the 1980s and the personal computer. Back then, they were clunky, they were slow, they were expensive, a real pain to use. Most of the mainstream analysts thought they were just a fad for nerds. But a few people, the visionaries, they didn't see the imperfect machine sitting on the desk. They saw what it could become. I think Ethereum is in that same spot right now. It's not perfect, it can be expensive, but its proponents are betting on its future, not its present.
So after weighing all the evidence, here's my take. Yes, Ether can absolutely enter a supercycle. But, and this is a very important but, it is not going to be a repeat of Bitcoin's. It's not going to be a copy. It represents an entirely new paradigm for how a digital asset can accrue value on a massive scale.
And this right here shows you exactly why. There are 2 totally different paths to the same destination. Bitcoin supercycle is driven by absolute programmed scarcity. Its narrative is digital gold. Its engine is the halving. Ether's potential supercycle, it's driven by utility. Its narrative is being the base layer of the decentralized economy. And its twin engines are the burn mechanism and staking. One is an immaculate store of value, the other is a decentralized world computer. They don't compete, they complement each other.
So if this Ether supercycle is actually going to happen, it will rest on these 4 pillars. First, the continued explosion of Layer 2s, all of which use Ether for security, basically turning it into the fuel for thousands of microeconomics. Second, staking has to become a standard, non-negotiable part of institutional portfolios, creating a massive supply sink. Third, Web3 applications have to grow up and move beyond speculation into true, real-world utility. And finally, and maybe most importantly, that grand narrative of a decentralized future has to continue to win the hearts and minds of people all over the world.
So let's answer the question we started with, directly. Is an Ether supercycle guaranteed? Absolutely not. In markets, our markets, nothing is ever guaranteed. But is there a stronger fundamental, economic, and narrative basis for it today than at any other point in Ethereum's entire history? The answer to that is an unequivocal yes. The foundation has absolutely been laid.
And so that brings us to the end. The final question we should be asking ourselves isn't a passive one of prediction. It's not, will it happen? The real question is one of preparation and conviction. It's a question for you. It is, when that supercycle comes, if it comes, will you be there? Thank you for joining me on this deep dive. I hope this analysis gives you the clarity and framework to navigate the cycles ahead.